Welcome to the Deep Dive, your shortcut to really cutting through the noise and getting straight to the insights. Today, we're digging into Goosehead Insurance's second quarter 2025 earnings call. And we're looking at how this company seems to be quietly aiming to redefine the insurance industry, not just, through normal growth, but really transforming into a tech-first kind of powerhouse.
That's absolutely right. And this isn't just about reading out numbers. It's about pulling out those, let's say, crucial nuggets that explain what they've been doing, highlighting their strategic shifts, and figuring out what it all means for, the competition and their own future growth.
We'll really unpack their playbook.
No, okay, so let's kick things off with the headline numbers for Q2 2025. On the surface, what jumps out?
Well, the immediate takeaway is a strong quarter, both growth and profitability, especially when you consider how tough the market's been. Total revenue climbed a solid 20% year over year to $94 million. And importantly, adjusted EBITDA, that's, a key measure of their operational profit before certain items that also jumped 18% to $29.2 million.
Which translates to a pretty robust 31% adjusted EBITDA margin for the quarter. I mean, for every dollar of revenue, 31 cents turning into core operating profit. That's very healthy.
Very healthy indeed. And okay, on the top line, total written premiums grew 18% to $1.2 billion. Their franchise premiums were really leading the way there, up 21%. But here's what really caught my eye. A huge, 103% surge in contingent commissions, hitting $4.5 million. What's that telling us?
Yeah, that 103% jump, that's significant. Contingent commissions, they're basically performance bonuses from the insurance carriers, right? For hitting certain profitability or growth targets. So that surge, it's a huge signal. It tells us Goosehead isn't just, slinging policies. They're showing increasing value to their carrier partners. They're bringing in good, high-quality business that actually performs well for the carriers. It showcases a unique and growing leverage they have in that ecosystem. It's like a bonus that underlines how efficient they are, and it's really a testament to the quality of the business they're writing.
Quality and efficiency. And crucially, their cash flow from operations up an impressive 53% year over year, generated $28.9 million. That kind of cash generation, it really speaks volumes about their underlying financial health, doesn't it? Especially when they're also investing so much in growth.
Absolutely. This whole financial picture, it paints a pretty clear trajectory of expansion, operational strength, all while, fueling those ambitious long-term goals they have.
Okay, those numbers are definitely compelling, but how are they actually doing it? Let's unpack the strategic levers Goosehead's management is pulling here. What are they really focused on for the future?
Well, at its core, Goosehead's long-term goal is, frankly, audacious. They want to become the largest distributor of personalized insurance in the U.S., within the founder's lifetime. They're banking on their huge network, over 2,500 licensed agents, partnerships with 200-plus carriers to get there. It's kind of a land grab strategy, but with a significant tech twist.
Land grab with a tech twist. I like that. Okay, let's talk about those twists then. One big thing is their agency staffing program, ASP.
Yeah.
It sounds like more than just recruiting, right? How does it specifically boost productivity for the existing agency owners?
Exactly. ASP helps the current agency owners find and recruit top talent. They've sourced over 500 producers since late 2022 through it. But it's not just about, putting butts in seats. What's crucial is how it seems to improve the productivity of all the agents within a franchise.
Interesting.
Yeah, it fosters accountability, they share best practices, it enhances lead flow. Take Troy Kropp, an owner in Arizona, 7 of his 9 producers. Recruited through ASP, helped him build a $10 million plus premium book. So this program isn't just filling seats, it's building high-performing teams by bringing in people who fit their high-growth culture.
That's a really powerful example. What does that tell us about, the strength of their business model compared to maybe more traditional competitors who just focus on agent count? Feels like a real differentiator.
It really does. It tells us they're thinking strategically about their people, about human capital as a key asset, not just a cost line. And this extends to they're finding new talent, too, from different places. They've got programs specifically for former service members. They believe veterans have that grit, intelligence, execution, focus things that are essential in their system.
Right.
And there's also a new MBA franchise development program that's designed to cultivate these growth-oriented owners who can scale up, multi-agent, multi-location operations. They're systematically building this talent pipeline for really aggressive growth.
And speaking of talent pipelines, you mentioned their corporate sales department is like a gold mine for new franchise owners.
Yeah.
Can you unpack that a bit more? Why is that internal pipeline so uniquely effective? 10 times more productive, you said.
That's huge. It's really a testament to their culture and their comprehensive training. These corporate agents, they've lived and breathed the Goosehead system, right? They understand the product, the process, the client experience inside and out. So when they launch their own franchises, they're already experts in the best practices, the operational efficiencies.
They hit the ground running.
Exactly. They hit the ground running with proven methods, and they see a clear path to potentially making 7 figures, which obviously motivates top performance and keeps them around. It's their best incubator for future high-powered franchise owners.
That's a fascinating feedback loop, fueling their growth. And they seem to be mirroring this kind of strategic approach with their geographic expansion too, right? Yeah. Tempe, Arizona was a big success. What's the thinking behind these new offices?
Yeah, indeed. The Tempe launch, it was their most successful new office in years. The idea is to strategically seed these high-powered franchises in regions they might not otherwise get into as easily, especially out west. Now they've announced plans for Nashville, Tennessee in Q4. It seems like a repeatable blueprint for expanding successfully. And this physical presence supports their corporate sales team, too. That team ended the quarter with 479 agents, up 53% year over year. Huge jump. And all this expansion helped drive a 13% growth in corporate new business commissions. That's their fastest corporate growth in 3 years.
Wow. Okay, so all this expansion, all this growth, it demands incredible efficiency. Which brings us to where Goosehead seems to be placing some really big strategic bets.
Yeah.
That third leg of the stool, the enterprise sales and partnerships team. This isn't just another sales channel, is it? It sounds more fundamental.
It absolutely is. And it's crucial for kind of insulating them from the ups and downs of the housing market and getting access to totally new client pools. Think large home builders or clients who aren't even involved in a closing transaction. This group is just growing exponentially. Produced 88% more new business in Q2 compared to last year. And it accelerated sequentially too, like 41% over Q1.
88%.
Yeah. And they highlighted 2 big new strategic partnerships that really show how this works. Warner, a big real estate firm in Illinois, and F.A. Servicing, a large mortgage servicer.
Okay, so how do these partnerships actually work? And what's the financial impact? Because, for the listener, this is about understanding how they're generating new revenue.
Right. So both Warner and F.A. Servicing are launching Goosehead franchises inside their existing businesses. Think of it like embedded lead flow. Warner, with its 2,000 realtors, 10,000 transactions a year, they can now capture insurance economics and make home buying smoother.
Makes sense.
And F.A. Servicing, they can offer a strong portfolio of home insurance options to their existing clients. These partnerships basically provide a built-in stream of leads that could quickly make these some of the biggest agencies in the whole Goosehead system. Financially, revenue comes in initially through new business royalties. Goosehead gets 20% of the commission there, but then significantly through renewal royalties later on, where their share jumps to 50% of the commission value. And what's really interesting is they said none of these new partnerships are even factored into their 2025 guidance yet. So that suggests potential upside that maybe isn't priced in.
Okay, that is a huge strategic play. Now let's switch to the AI arms race. It's easy to throw around AI reduces costs, right? But the real insight here seems to be how Goosehead is using AI to do something that sounds contradictory. Cut service costs and improve the client experience at the same time. How are they pulling that off? What's the bigger impact?
Yeah, it's fascinating. For the first time ever in their history, they expect the total cost of service delivery to actually be less in the second half of 2025 than the first half, all while continuing to improve client satisfaction scores. This isn't just, tweaking things for efficiency. It's a fundamental shift.
Right.
It frees up a significant amount of capital. It's almost like an internal funding source for their aggressive growth and tech investments. They're using AI to optimize the experience for their existing clients, streamline internal stuff, which lets their human agents focus on more complex, higher value interactions.
And this tech focus goes even further to this massive undertaking.
Yeah.
A U.S.-first direct-to-consumer marketplace for personalized insurance. It sounds incredibly ambitious. Doesn't that potentially disrupt their own agents?
Yeah, it is ambitious, yeah. The project aims to create this really frictionless process using data to match clients with the right carriers and policies, maximizing outcomes for everyone involved. They think their existing data and carrier relationships give them an edge here, letting them intelligently match carrier risk appetite with what clients need. This marketplace, it could grab extra market share through really targeted marketing, referrals, cross-selling to their huge existing client base, over 1 million clients, 1.8 million policies. It's definitely a bold move to sort of cut out parts of the traditional insurance process. They're leveraging their unique data and relationships to offer something highly personalized at scale.
Okay, shifting gears just slightly. How does all this ambition, the growth, the tech investment fit into their financial outlook for the year? Did anything change after this quarter?
Interestingly, no, not on the revenue front. Goosehead maintained its full year 2025 total revenue guidance, $350 million to $385 million. That's still 11% to 22% organic growth. However, they did tweak their total written premium guidance down slightly to $4.38 billion to $4.65 billion.
Okay, why the difference? Premium guidance down, but revenue guidance holding steady. That seems like a key point.
Yeah, it reflects this near-term kind of gap where premium increases are slowing down faster than client retention is recovering. Basically, rates aren't rising as sharply as they were, and retention isn't quite back to its peak levels yet.
But the revenue guidance holds.
Right, because they expect the average commission rate across their book of business to improve, so they capture more revenue dollars from the same premium dollars. Plus, client retention, it's currently at 84%, and they say it's consistently rising. They expect it to pick up speed in the second half. Oh, and they also successfully repriced their term loan back in July, which cuts their annual interest costs by about $1.5 million.
Useful.
And they recovered about $4 million in past due commissions and fees from a large carrier partner this quarter, with another $1.5 million benefit expected later this year from increased commissions with that same partner. So yeah, lots of positive tailwinds helping keep that revenue outlook stable despite the premium moderation.
Okay, so when you pull all these different threads together, what does this whole picture mean for you, the listener? Looking at Goosehead and the broader market, it's been a really tough environment for insurance lately.
It raises that critical question, doesn't it? How has Goosehead not just survived, but actually thrived in this challenging product and housing market? Management's take is that the tough market actually forced them to become a stronger company. They had to build out scalable infrastructure, invest in top talent, develop serious tech skills, things that position them to be, well, many multiples of their current size down the road. They feel like this period really prepared them for rapid and profitable growth because it forced innovation and efficiency. For an investor, seeing a company emerge stronger from a storm like that, that's a powerful signal.
That resilience point is good. And they also mentioned the consolidation happening within their franchise network. They see that as a net positive, even though it means fewer individual franchises on paper. How does that benefit them?
Yeah, it's actually a huge positive from their perspective. When smaller agencies merge into larger ones, the buying agency's productivity jumps significantly, up 21% over the last 12 months, they said. It really highlights the value of their top tier, maybe their top 200 agencies. Those agencies have nearly 4 times as many producers per franchise as the others and grow new business over 30% annually. That mirrors the performance of their own corporate offices. So this consolidation streamlines the network, concentrates growth in their most efficient operators, and ultimately strengthens the whole system in the brand.
Okay, so it definitely sounds like a strategic long game, focusing on capturing that future growth, maybe sacrificing a little short-term margin optimization, especially with those new hires and office expansions you mentioned, possibly hitting Q3 margins. How do they square that with investors who might be looking for immediate profits?
They're clearly signaling that long-term value creation is the priority. Yes, there might be some near-term margin pressure in Q3 from those deliberate investments, but they see this as a real window of opportunity opening up. The product market is starting to turn around. Technology is enabling totally new strategies. Those partnerships are accelerating growth. They believe now is the time to press hard into these opportunities, even if it means less profit today for potentially massive gains tomorrow. Plus, they're seeing positive signs in the broader product environment. More standard, admitted carriers are coming back into markets. People are shifting away from state-run plans. That should help commission rates and lead to healthier market conditions overall. They actually anticipate commission rates will start ticking up through the rest of this year and into 2026. So that paints a better picture for future profitability, too.
All right, makes sense. It's time now for our This Is Not Financial Advice segment. This is where we pitch an outrageous but plausible trade idea, like you might hear in a hedge fund meeting.
Okay, so given everything we've just talked about, Goosehead's aggressive transformation, their stated goal of becoming more of a tech company powered by insurance pros, the trade idea here is go long Goosehead, ticker GAD, and simultaneously short a basket of regional property and casualty insurers, specifically the ones still heavily reliant on, let's say, traditional, less tech-savvy, independent agency distribution.
Okay, lay out the rationale. Why is that a conviction play for the future?
Well, the rationale is pretty straightforward, actually. Goosehead is making a fundamental shift. They're moving from being an insurance distributor helped by tech to becoming a technology organization helped by the best insurance professionals. That's a key difference. Their big investments in AI for cost cutting, that pioneering direct-to-consumer marketplace they're building, the exponential growth in enterprise partnerships, it all creates this sort of asymmetric upside potential. They look poised to grab significant market share and drive better margins by using data and efficiency in ways that, frankly, many traditional players just can't replicate easily or quickly. As the whole insurance industry keeps consolidating and going digital, those less agile legacy models are going to face more and more pressure. So going long GAD while shorting a basket of traditional P&C players, property and casualty, home and auto insurers, that feels like a high conviction, future-focused bet on how insurance distribution is evolving.
That was a really insightful deep dive into Goosehead Insurance's Q2 2025 earnings. We've definitely explored their solid financials, but more importantly, those bold strategic moves into AI, new partnerships, and how they're really positioning themselves for potentially huge long-term growth by, well, basically trying to rebuild the architecture of insurance distribution.
Yeah, and just remember, everyone, this deep dive, it's really designed to inform you, maybe spark some curiosity about what's really driving the numbers. It's absolutely not financial advice. All the insights we discussed, they're based purely on what was presented in their earnings call and, our analysis of what that might mean.
We hope this analysis gives you a much clearer picture of Goosehead's path forward and maybe those broader, accelerating trends shaping the entire insurance industry. I guess the question for you to think about is, how quickly will the traditional insurance world actually adapt to these tech-driven disruptors? And what does that mean for how you think about industry disruption generally?
Absolutely. And if you have any more questions or maybe other topics you'd like us to unpack sometime, feel free to reach out. But for now, thanks for joining us on the deep dive.